Welcome back to another video at the Capital Traders Group. Now in this video I'm going to be showing you guys a recap of a trade that was taken this week. I shared it publicly as well, of a gold position that ended up peaking about 500 pips. Now this was a swing play, again very high probability, and it's part of my own personal trading strategy, and I'm going to actually break down how and why I took this position so you guys can catch it, but this is mainly a very high probability position. So this, a lot of value I'm going to be giving out is not value you're going to be really finding online anywhere else. So before I jump in, please do leave a like and subscribe, and without further ado, let's get right into the video. You will know that I am majoritively a swing trader, but I do sometimes intratrade. But before anything else, I always pay attention to higher time frames, as higher time frame narrative will display in true intent of price. Okay, so that's exactly what I'm going to do on gold, and that's exactly what I did. So let's go on the weekly time frame. Actually, let me just go on the monthly first. Okay, so monthly on gold, right, as you can see, is gold is in a bull market, right? If you look at things on a higher time frame, what you see is price makes a higher high, a shallow higher low, it makes an extended push to the upside, makes a higher high, a blow off top, and then retraces to slow price down for a higher low, for again overextending to the upside, okay, before having another slow retracement to have another higher high, higher low, to then potentially have another higher high, which is taking out this high. So this is technically a higher high to what I was looking at, but now what I'm expecting price to do is have an overextended move before we see that slower retracement down, before we see that next higher high in price, wherever that is. Okay, so that's in essence how the gold market likes to move, and this is mainly because gold is seen as a safe haven asset, so investors see it as a more safer investment, right? And history will dictate that as well. So this is the monthly time frame on gold. Okay, so that's just, you need to first have an understanding of the characteristics of the asset you are trading, and this goes with any strategy you're trading. You need to have a clear understanding of the characteristics of the price action your main asset that you trade will have, and this is usually why I recommend newer traders to focus and hone in on one pair in particular. So if you're trading forex, have one pair that you want to focus on, whether it's you like the volatility in certain times, whatever it is, focus on that one pair, okay? Because then you're going to start understanding and learning about its characteristics. So this is the characteristics of gold, okay? So now we've understand the monthly cycles in terms of how gold likes to move from decade to decade and year on year. So we understand that gold is in a bull market. So now I scope down on the weekly time frame, okay? And what you can see clearly now, if you guys are savvy enough, you'll see that we have clear liquidity. Okay, let me make this a little more easy to see. Right, we have clean equal lows. Okay, and what did price do? It come out, and you guys should already know this, when there's clean liquidity built, the market is going to come and hunt out all this liquidity. Why? Because when there is prominent lows made in the market, retail traders usually place their stop losses below these levels. So there's a lot of liquidity, money sitting below these levels. So what the market does is it hunts these zones of liquidity before the real moves in the markets are made. So that's why it's very important to identify where liquidity is resting in the market in particularly. So what I did is I then mark out the raid zone, which is here, right? You have the zone that was raided, and then you have an expansion to the upside, which peaked about 3,700 pips, right? Which is a lot of movement. Okay, so if you did catch that move, if you trade raids like that, you would have made a lot of money. But I didn't catch this move. So, but again, I'm building my story. I'm building the narrative of how price is moving. So I understand that price is making the raid, and we have these clean highs, right? The previous all-time high, and again, because of the monthly time frame, we know that price is in that expansive push, right? After that, we've seen that retracement on the higher time frames, right? I'm waiting for price to make that expansive overextended push to the upside. So where would be my zone of targeting? Okay, I understand that once that raid is taken, I'm expecting these highs to get taken, because this is near liquidity as well. It's not clean equal highs, but it is relative equal highs. So there is a lot of stop losses above these highs, right? So liquidity that the market will need to target in the future. So what I'm looking at now is I'm going to hone in and pay attention to structure now, okay? Now this is where structure comes into play. So I'm going to hone in on the daily time frame. And now look at price. So this is the raid zone, we already know. But what does price do? Price makes a low, a higher high, a higher low, higher high, and then a higher low to then make a new higher high. So in essence, if you understand structure and legs of a market, you know that price is going to now make a higher low somewhere in the market before then making a new higher high to come and target in that $2,100 region. Okay, roughly that is the region where liquidity is resting above, and that would be my majority my swing target. But I can't just enter in price now because I know price is retracing to make in that higher low wherever it is. So this is why you start honing in on lower time frames to start looking for intent in price. Right now we understand the higher time frame picture. Now is where we start jumping on lower time frame and we don't randomly look for entries. We want to see price give us intent for that bullish move, because we have confluences built now of price being bullish, but we need to wait for price to retrace into a significant zone, okay? Because we don't, at least I don't buy after significant moves in the markets are made. Why? Because after significant moves in the markets are made, you usually see a retracement, okay? And when that retracement is, that's when I usually like to enter. I basically enter off retracements when I'm trading with the trend, okay? That is very, very important. Now, so where would price be looking at, right? So if you're a retail trader, you'd see, okay, this is a simple sort of a pennant, right? Price is making a pennant and it's pushing up higher. Now, I don't trade patterns like that. Mainly because I focus on, you know, statistical edges in the market, as that will usually where your profitability is defined in. But in essence, what I like to, as you guys seen, focus on is liquidity and structure majoritively. So what do we see here? Now let's focus in a bit. I see the high get taken, okay, which is clean, and then you also have these relative forms of equal highs. So this high gets taken, okay. Let's make it a little zone of, so the liquidity above is taken out. Now we also have a smaller form of liquidity at the lows taken out here. So the lows are taken out here, okay, and also the highs are taken out here as well. Now, if you guys have seen my older videos, you'll know that I like to trade these sort of setups, right? Where you see both sides of liquidity structure taken, and then you see an impulsive move to the upside. Now this is where the intent of move is made. So this is where the intent of the move is made, because these two zones, right, where this high is taken and then this low is taken, this is where the intent of price is given, okay? So then I know that this is, once this low is taken, okay, let me mark it out bullish, I know that if price breaks structure to the upside, then that is more inclination that price is going to push up higher. So that's where the bullish intent comes from, okay? And then once the external structure is taken, you know, okay, hold on, price is going to move up higher on a macro perspective, okay? That's how I like to trade it. Now, this same setup can be traded the other way as well. So let's say you have a range, okay, which you sort of have here, and then price takes out the low first, okay? It takes out the low, and then it comes up and takes out the high, then comes back down to mitigate a particular level, to then come back higher to take out the next previous high. This zone is where the intent is derived from. So once this high gets taken, that's where I usually look to scale in on a move, okay? And I usually like to keep my stops below the previous low, okay? Because it helps understand where momentum is going to carry on. And this is what I usually like to call neutralization of liquidity. Okay, I have highlighted this before, but this is a trading model of mine that I usually find very, very high setups from. But okay, so now we understand both sides of the liquidity is neutralized, and then we have a intent move, we have breaker structure, and then we have an external breaker structure. That is our true intent. So where would be the next zone I'll be looking for price? And this is where I did look for price for bullish confirmation, and that is from this level here. Okay, now you could zone it down here, which is even valid. That's valid as well. But in essence, the reason why I want to look at this at the lower level is because we have still clean imbalance that has not been filled. Okay, we had this larger imbalance, right? But that's majoritively been filled. But we have this this region left to get filled, and that's where I'd look for price to then come out and first target this region to potentially then come and target the $20,100 region per ounce of gold. Okay, so that's the setup clearly. All right, and that's on the 6-hour time frame, or the 4-hour as well. So what we did, right, is we had a order here. Now I didn't have we had an order here set. Now the reason some of you may be asking is why not put the stop loss below this high, below this low, majoritively because there is liquidity resting here. So when you see big moves like this, especially on gold, what you'll see happen is price will sometimes wick out this liquidity and then come back higher to fill in this potential zone where you have this imbalance on the lower time frames before you see that big push to the upside. Now this does happen on gold, so I recommend you back test it a lot. That's why I had a bit of a wider stop loss. Okay, because I trade with size, I don't like to have a very tight stop losses. I let my trades breathe, okay? And this is mainly because of the reasons why. On the lower time frame, you usually have smaller zones of inefficiencies that price likes to fill before bigger moves are made in the market, okay? So this is where we had a limit order. Again, I shared this trade with the team. And then I looked to my first major target was this high, and then my second was this high above. Okay, now again, this comes down to trade management as well, but the way we played this was very I'll explain shortly, but I'm gonna let this play. Right, this is when CPI news came, and this is when we took out some partials, okay, around the news time, just in case, to be on the safe side, and we moved stops to break even, okay. But still, my main target was this high, right? Why? Because it's a clean form of liquidity, all right? The market's gonna come out and take out that high. There was a very high probability of that, and as you'll see, it did exactly that. Now, price peaked at around 600 pips, okay, and this is where I recommended everyone take out at least 80% profits. We took out major profit at this region, mainly because of the DXY. Now this time I was expecting to see a reversal on the DXY, because after CPI on Friday we had retail sales news, and I was expecting to see some sort of manipulation on the cards and a retracement on the higher time frame on the DXY. Hence why I was expecting to see a sell-off on gold, and that's why we took out a major amount of profit as well. I'll leave a screenshot of the trade and the profits as well, because this setup particularly played very, very well. I scaled in a bit more aggressively on my second account. You'll see I'll leave a screenshot of that as well. But it played out very, very well. And if you see, I posted this on the public Telegram channel as well, where I was expecting a reversal, and as you'll see, that's exactly what happened, right? Now, if I just held this position, right, I would have lost out on a lot of money, okay? Because there's now a very, very likely possibility of price can come down lower, maybe take out this high, this low, sorry, before we see that next push up. Now, my target is still 2,100 a region, but before that happens, we may see a retracement back into this low, okay? It's still very, very possible. Why? Because this was the low that neutralized both sides of the liquidity before we saw the intent of the move. So this is my next zone of reference, and this is a zone you can mark out on your time, on your charts as well, to keep an eye on for swing longs on gold in the coming future. But I hope you guys found value from this video. If you did, please leave a like and subscribe. And with all that said and do, I'll see you guys on the next one. Bye bye.